We're going to continue with the final session of the day, developing sukuk and other long-term Islamic financing for sustainable development. Just a few brief words. Sukuk is one of the most visible headline-grabbing elements of Islamic finance, both regionally and in markets across the globe, as was reiterated a few times this morning. Over the past year, governments in Luxembourg, Hong Kong, the UK, and South Africa have joined the list of those keen to tap this market. Now, the next step is to use a sukuk as a financing instrument to address the appetite of countries in the region for infrastructure. But just how ready is the sukuk market for this next step? Are the structures ready and able to meet the specifics of projects like this? And are sukuk investors themselves ready for what could be a different proposition from what they've seen before? Questions hopefully we will address in this session. Our moderator is Dr. Mahmoud Mohildin, Corporate Secretary and the President's Special Envoy from the World Bank. Dr. Mohildin, the floor is yours.
Assalamu alaikum wa rahmatullah. Bismillah ar-Rahman ar-Rahim. I'm very pleased and honored to be given this opportunity by the Central Bank of Kuwait and the International Monetary Fund to moderate this important session, and it's coming after very successful sessions and very impressive introductory remarks, which laid the ground for a very fruitful engagement on a very specific topic on the role of long-term finance based on Islamic law and Sharia, the role of sukuk and other long-term instruments in funding development and priorities of governments and the corporate sector. We have very distinguished speakers coming with a variety of backgrounds and experience in different aspects of the work. I'll introduce them in Arabic, and then they will know their names and they will come up to join us up here. معالي الدكتور عشرت حسين، المحافظ السابق لبنك باكستان المركزي وعميد ومدير معهد إدارة الأعمال بباكستان. Please join us. الدكتور محمد دمك، المدير الدولي للتمويل الإسلامي إدارة بحوث الخدمات المالية بمؤسسة ستاندرد اند بورز لخدمات التصنيف. البروفيسور رفعت عبد الكريم، الرئيس التنفيذي للمؤسسة الإسلامية الدولية لإدارة السيولة. والسيد مازن سعد الناهض، الرئيس التنفيذي لمجموعة بيت التمويل الكويتي. والأخيرا وليس آخرا السيد عبد المحسن عبد العزيز الفارس، عضو مجلس الإدارة المنتدب والرئيس التنفيذي لمصرف الإنماء بالمملكة العربية السعودية. Right. In this excellent organization of the sessions, I've been told that everybody had been shared with some good background material, which you don't really need, some good questions that definitely don't need as well to know in advance because of your familiarity of the issues. So from time to time, I may go beyond what you may be expecting, depending on the flow of the discussion. But we're now tackling a very important aspect of Islamic finance. As we have heard, it's one of the most important parts of innovation in Islamic finance, sukuk. It has been growing significantly. The size, again, we have seen some variation of the estimates of the size, but the latest confirmed figure is more than $300 billion dollars as of back in July 2014. 1/3 of that had been issued by governments, roughly speaking. Corporate then had been very much active, but did we realize the potential of long-term Islamic finance? And if not, and I think the answer would be yes, it has been there. We have been seeing the progress, but we can expect more from Islamic finance than what we had seen so far. So what could really be helpful in terms of regulatory framework, infrastructure, and market readiness to see more contribution coming from the Islamic finance instruments of long-term nature? And as has been in the title here, the talk is about long-term Islamic financing for sustainable development as well. So it's not just sukuk. If you can share with us some of other instruments that you can consider in the development. So who likes to take that first? Dr. Escher, would you like to start?
Well, thank you very much. First of all, let me thank the Central Bank of Kuwait and the International Monetary Fund for giving me this opportunity to share my thoughts about this important topic. I'm also particularly happy that the Managing Director herself has made herself available for this conference, which is extremely important, a signaling effect for the international markets as to the importance of Islamic finance being integrated in the mainstream. And that's my starting point. We do not want Islamic finance either to be a ghettoized or a niche market, but it should be an integral part of the international financial system. That requires that there are certain prerequisites which have to be met in order to meet this test. It is not only for the Muslim countries, and as my very able colleague Dr. Zeti said, even in Southeast Asia, the non-Muslims are actually subscribing to this particular instrument. So what do we need? And I would say that there are 6 I's which have to be put in place. First of all is the issuers. If the issuers remain only the governments of the Muslim countries, then we are not going very far. It has to be a diversified base of the issuers, of the sovereign and non-sovereign from the entire global market. And that will be with the varying tenor so that there is a yield curve which can then guide the corporate investors also, so that they can look at issuers also, so that they can look at the opportunities. And this will also need market depth and liquidity from the global financial system. Second is the investors, I, which is that you need diversified investor base, and the propensity to take or share risk is very, very limited. So first we have to actually aim at ethically responsible, socially responsible investors. And today there's a $5 trillion market in the ethically investors. Why can't we actually tap into that and make this Islamic finance at least attractive to them? The third is infrastructure. And this morning we had extremely useful discussion on the regulatory, legal, tax treatment, foreclosure laws, insolvency and bankruptcy, secondary market deepening, accounting, and statistics. The fourth is incentives. Now, even in the conventional markets, you have equity risk premium, which has to be paid as compared to the fixed income instruments. Therefore, if we are going for the risk sharing, there has to be a premium which gives an incentive to the investor to subscribe to the sukuk and the long-term bonds. And at the same time, there should be consumer protection, a level playing field, which I think everybody has been talking about. And therefore, this requires the infrastructure should also have lender of last resort mechanism and the resolution mechanism. The fourth I is information. Because in risk sharing, there is an asymmetry of information. Somebody, Mudarib or Musharik, has a better information as compared to the investor. Therefore, we have to provide more information compared to the conventional banking in order to allay that fear and create that trust between the two parties. That means credit bureaus, more sectoral analysis and research, literacy and education. The fifth or the sixth one is the instruments. We have been all being told, and this is a practice, that high quality liquidity instruments are not available. And therefore, it is absolutely essential that we should diversify in instruments, create instruments at least which are comparable to the conventional financing. Otherwise, this will be a constrained growth as far as the sukuk is concerned. So these 6 I's, in my view, are essential for integration and expansion of Islamic finance for long-term financing in the larger international financial system.
Thank you so much, Dr. Damat. What's your take on this? And being in the rating agency, you may have some heads up on the pipeline, so you see a promising transactions without really sharing with us details if they are confidential, but just about while we have been seeing the stock so far, what are you seeing in the future?
Thank you very much. First of all, I would like to join also my colleagues in thanking the Central Bank of Kuwait and the International Monetary Fund for inviting Standard & Poor's to speak in this important event. My colleague talked about the 6 I's. I'm going to talk about the 3 R's. And the 3 R's are reduce time to market, reduce costs, and reduce complexity. Today, if you look at, for example, the experience of South Africa and London, it took them 5 years between the time they have announced that they want to tap the sukuk market and the time that they have effectively tapped the sukuk market. 5 years. And that results sometime in some countries looking at the sukuk market, but then deciding to go eventually the conventional route because it's much easier and it takes much less time, much less cost. You just have to take the documents of a conventional bond from a shelf and then add the amount and go and hit the market. You can do it literally in 15 minutes. How do we get there? How do we apply this the triple R? I think standardization is the key. And when I usually talk about standardization, the immediate reaction is, well, we were already there. There's the IOEF, they came up with standards. There's the IFSB, they came up with standards. And I think they've made significant and helped the industry to significantly advance by coming up with these standards. But now we're talking about a standardization that will take the industry to the next level of growth. Standardization of documents, meaning that for the most accepted and the most common structures, it would be much easier for issuers to have standard set of documents where you just plug the underlying asset, add the amount, and go and hit the market in a very short time. And it will also help not only to increase the appeal of the industry of Islamic finance to new issuers, but it would also free the stakeholders' capacity, like the Sharia scholars, the lawyers, the multilaterals, and etc. It would free their capacity to focus on the next generation and on innovation in Islamic finance and how to create the next generation of instruments, the instruments with higher profit and loss sharing, the instruments that would serve to the financing of SMEs, and the instrument that would really help to take the Islamic finance industry to the next level. Now talking about the pipeline and where do we stand in the market. In terms of total issuance, the year 2015 is a year of correction in the Sukuk market. The volume of issuance has dropped by almost 40% year to date. Last year it reached $113 billion. This year we expect the volume of issuance to reach something between $50 and $60 billion. But that was not because of the drop in oil price or because of the drop in the economic performance of some of the core markets where Islamic finance is developing. It was because one large issuer, which is the Central Bank of Malaysia, has decided to stop issuing sukuk and to switch to liquidity management instruments that were reserved to Islamic banks. The sukuk issued by the Central Bank of Malaysia were extremely successful. Initially, they were created in order to offer the high-quality liquid assets that are lacking today in the industry, but then they became really victim of their success. The investor base of this instrument was so broad and going beyond the Islamic banks for which they were created. So at a certain point, the Central Bank of Malaysia decided to switch to instruments that are reserved to the Islamic banks operating in Malaysia. And if you exclude this effect, the drop in issuance is almost 10%, which is not that bad if you take into consideration what happened to oil prices and the impact it will have on some of the core markets where Islamic finance is developing. Going forward, what do we expect? We think that volume of issuance would be between $50 and $60 billion over the next couple of years. And we think that at some stage, we would start to see a higher interest from some of the countries of core markets to tap the sukuk market in order to continue their infrastructure spending and their investment spending. And our base case scenario is that we don't think that in the GCC there will be any major cut in terms of investment spending. Malaysia has published its budget law for 2016, which confirmed that the investment spending will continue for 2016. And we think that part of these investment spending will be financed through sukuk because sukuk are natural partner for that.
Right. And on the second round of questions, I'll be asking you about the potential of the transactions in the midterm, and whether you are expecting further quote-unquote corrections. And the other thing about the rating capacity, and whether we have, especially at the national level, what could be really adequate in terms of readiness to issue with satisfactory rating arrangements. Liquidity has been mentioned, and it's great that we have Professor Dr. Rifat Ahmed Abdul Karim, the Chief Executive Officer of the International Islamic Liquidity Management Corporation. I would appreciate, before you get into the substance, or could be part of the substance as well, if you can give us a background why we have the International Islamic Liquidity Management Corporation, just for the education of those of us who don't know the background.
Thank you, Dr. Mahmoud. The establishment of the International Islamic Liquidity Management Corporation, or IILM in short, goes back to the credit of the central bank governors who were at the IFSB at the time. They felt that one of the issues that was facing the challenges of Islamic banks was liquidity management, and hence they took forward the step of establishing the ILM. At the time, the IFSB established a high-level task force, which was chaired by Her Excellency Governor Zetti, and this led to the establishment of the ILM in October 2010. to date, I think the ILM is now can be called a game changer because as of today, it has issued and reissued 12.69 billion, not million, billion US dollar of sukuk amounting to that, and it is rated by S&P A1, which is a very high rating. It's the only sukuk, short-term sukuk in the market. All the other sukuk we hear are long-term in the market. Now, in addition to that, the ILM has also addressed the issue of tradability for Islamic banks. You see, if, for example, an Islamic bank buys a SAC, which is basically based on debt, they cannot trade on it. And so we are the only organization, I believe, we have applied the Islamic Fiqh Academy of having 51% at the portfolio level of our assets to be tangible and 49% debt. Now, all our assets are sovereign assets. We are not a sovereign organization. We are owned by central banks, but all our assets are mandated by our governing board to be sovereign, and so we have adhered to that. As of today, we have about 67% of our assets are tangible and 32% are in debt. And so this can be traded. That took away all the arbitrage because when we sell through an auction of primary dealers who are only nominated by our member countries. And so part of them are conventional banks, but the condition they must have an Islamic banking or Islamic finance business, which they have. We have 3 of them, Standard Chartered, Qatar National Bank, and National Bank of Abu Dhabi. The 3 of them are also A1 rated by S&P, which is a requirement for our program. By the way, we have adapted the asset-backed commercial paper program to the specificities of Islamic finance. And we had S&P in one of their clips we found it by chance in Google. They didn't tell us. They said this is a landmark. And we are, I think, because only very few banks, even in the West, do the asset-backed commercial paper. And so we took it one step further by applying that to the specificities of Islamic finance. And now we don't have, although we have issued and reissued, we don't call them rollovers, by the way. We don't have any debt because we have paid for all our asset providers who have sold us their assets. We have paid them in full, so we don't call them rollovers. These are issuance and reissuances. And we don't have any outstanding sukuk because we don't have any amount to pay. We have paid that already, right, from our auctions. And we don't have any maturities mismatch. We haven't borrowed short, for example, to lend long. Our maturity is those central banks or sovereigns who have sold us their assets. It's a long-term asset. We've paid for them. We rent it back to them, and so when we issue the short term, it's the mismatch of maturity is a maturity of periods, not a mismatch of maturity of debt. I think that has to be highlighted very importantly. That's why I say we are a game changer here. And although we have provided the Islamic finance with one of its basic infrastructure, i.e. the liquidity management, with a high quality asset, I believe also we are the only institution so far that has provided an instrument that can meet the criteria of Basel III for HQLA, high quality liquid assets. I don't think that the long-term sukuk meet that. Why? Because of the price volatility. One of the conditions laid down by Basel for an instrument to qualify as an HQLA is that it should have a price stability. Yes. And we know that a long-term sukuk, especially during their first period of when they are issued, that the exception is towards the end of their maturity, i.e. when they have 1 year or less for maturity, then the price starts to stabilize. But before that, the price starts fluctuating, and hence they cannot meet that. We are the only one, I believe, that we can meet the HQLA, but none of the long-term sukuk so far would meet that. So that's perhaps give you an idea of what is the ILM.
Well, thank you so much. We'll come back to you with the couple of questions related to some of the issues related to liquidity management and the primary market, and some of the issues related to liquidity management and the secondary market.
My pleasure.
And the issues related to tawarruq as well.
Okay. If I can answer that.
Yeah, well, if anyone can you are first among them. So, some market perspective, and let me start by the Kuwait Finance House Group Chief Executive Officer, Mr. Nahid. Back in 2011, you issued a very interesting report on long-term finance and the role of Sukuk, and issues related to basically what we are discussing today. You raised then challenges related to liquidity, frequency or regularity of issuance, and matters related to standardization. Since 2011, what did you see as major progress, and what could be the concerns from your perspective going forward?
Thank you. First of all, I'd like to thank the organizers, Central Bank of Kuwait, represented by His Excellency the Governor, Madame Christiane Lagarde. Thank you very much for hosting us here. Like you well said, since 2011, the issues have prevailed, and we still see some of those issues prevailing, but on its way to being resolved. I'll give you an example. On the 5th of November this year, Kuwait, despite its very long history in Islamic banking, particularly Kuwait Finance House being in the market for the last almost 40 years, what we've noticed is we've just approved the Sukuk law in Kuwait on the 5th of November by the Minister of Finance. And the bylaws for the CMA regulating the issuance of Sukuk has just been issued yesterday. This is just an example of the lengthy process, the regulatory changes that are required in order for jurisdictions such as Kuwait to start issuing Sukuk. This has been achieved, with the help of our regulator, the Central Bank of Kuwait, in order for it to happen. But this is the type of delays that we face as practitioners, as potential managers or issuers of Sukuk. We face regulatory issues in trying to issue Sukuk. As such, we move to other jurisdictions for the issuance of Sukuk rather than use our own jurisdiction. This also puts pressure on Kuwait-based issuance of Sukuk. And we know for a fact that there are a lot of institutions that are interested to issue Sukuk in Kuwait, but due to the restriction in the law, the ability to do so prevents it from issuing it in Kuwait. Thus, we seek other jurisdictions to do so. Second, which was mentioned by pretty much the entire panel here, is standardization. Because as you well know, Sukuk are prime instruments for Islamic banks. Islamic banks are extremely hungry for high quality liquid assets. Sukuk are characterized, some Sukuks are characterized as high quality liquid assets. And as such, it would complement our balance sheets, it would complement our liquidity and utilization of our capital adequacy relative to the returns that are generated from these Sukuks. So standardization definitely would make it easier for all Islamic banks to participate in any single issue rather than have varying Sharia board differences between each institution and another, where one would allow purchase of the Sukuk and others wouldn't. Are we moving ahead? Yes, we are definitely moving ahead. We're seeing the growth in the market. We're seeing issuers that we've never dreamt of, thought of issuing. The examples that were given earlier, we were participants in the South Africa issue particularly. This was, in my opinion, a landmark deal as far as we are concerned, approaching an African nation country in South Africa and arranging for them a Sukuk. South Africa is not an Islamic country, but South Africa made sense of the structure of the Sukuk, and as such, it met their funding objective with the right price, and as such, we were able to place it. This type of model we would like to replicate in other jurisdictions as well. Ultimately, we as Islamic banks offer a significant amount of value through the issuance of sukuk. It diversifies the funding sources of institutions that are looking to diversify their funding sources, not relying on conventional bonds, for example, and looking for other funding alternatives. For the lenders, naturally, sukuk presents a better risk instrument in comparison with conventional bonds. And I'm talking here about senior unsecured type bonds. Because naturally sukuk are asset-based, and as such it provides more security for the sukuk holder vis-a-vis secured bonds.
Thank you so much. On one of the issues you raised on the 2011 report, you raised the issue of taxes. We'll be coming back to you and others wherever you are seeing a challenge related to taxes of the returns or the possible capital gains, and what's the approach in dealing with them. So now, Said Faris, the Managing Director of Nama Bank, what's your take on the topic?
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين. Dr. Mahmoud, just allow me to thank the Central Bank of Kuwait as well the IMF for organizing such conference. This is the highest official in such conference related to Islamic finance. And in fact, when you see many governors, many regulators, as well many supervisors in such conference, I believe inshallah there will be a lot of results out of this conference. Back to your questions, in fact. Let me start by just a story, which is a real story, that happened about 10 years ago. I joined the largest international corporation board of director in the Middle East, and I think you will know it, which is out of the oil field. And the first meeting of the board of director, there was item to issue 1 billion Saudi Riyal bond. And then after discussion, this is the first meeting for me with other whom been in the board for a long time. I raised my hand. I said, why not sukuk? And then everyone has looked at me, sukuk. Fortunately, IDB was issuing the first sukuk at that year, which is around 2004. And I said, yes, sukuk. They said, this is 1 billion. It will be very difficult to attract people to subscribe in such 1 billion. Then after discussion, we agreed, let's give it to the management. And it's been reported in the minutes, sukuk dash or bonds based on the management, because they mentioned it will be more difficult, more expensive. I said, if it's more expensive, I will support your decision to go to the bonds. Do you know the results of that? Within less than 6 months, they came back to us by circulation asking to raise that 1 billion to 3 billion. The demand came 4 billion Saudi Riyal. Within 6 months, they came for second issue, 5 billion Saudi Riyal. And the demand came 9 billion Saudi Riyal. And then within less than a year and a half, outstanding sukuk for that corporation reached 16 billion Saudi Riyal, which is unfortunately it was short, mid-size, 4 years, and been settled. So there is a huge demand for the capital market instruments, especially sukuk, and yet there is very short in the supply, in the issuers. So I believe one of the main issue here is, unfortunately, we start Islamic finance, Islamic banking, a way of regulator. And I would say that supersede the regulators. And then we try to take conventional bank products, squeeze it in the Islamic, which is affecting the Islamic. I believe this is the most dangerous related to the Islamic finance. If we think seriously about what mentioned in the speech today, especially by the Central Bank of Governor of Kuwait, when he said Islamic teach is enough for a lot of instruments, and I can give you numbers. In fact, we start in our bank issuing products, and we find the demand is so huge. We go back to the sukuk issues, then I will touch on the tax. Sukuk issues, unfortunately, used to be mid-term or short-term. For long term, 5 years maximum. Today, central bank issuing, you will see our appetite in the 5 years maximum because of many reasons. In 2009, to be very precise, that beyond 10 years represent less than 10%. In 2013, it's a grow, so this is there as trend. It represents about 20%. We are in need for long-term sukuk to fund the infrastructure projects. Infrastructure projects, you are speaking about 30, 40, 50 years, and we didn't invest in there. Fortunately, the Islamic instruments give us the flexibility. You can have it floated rate if you have ijara or musharaka or mudaraba. As well, you have fixed if you go to murabaha. And long term, definitely need to be floated rate. And the governments in the Islamic world should lead issuing. And if the government is not issuing sukuk, one of the mega projects being established in my country, which is the metro, and it's the largest worldwide to be done in one time. 6 lines, 84 train stations, 300 bus stations connected to that train. And the cost is 84 billion Saudi riyal, which is about 25 billion US dollar. That's fantastic for issuing sukuk. If you issue it, and then sukuk holders will own it, and then lease